So Gray Television Network. They're actually announcing earnings today, so this will be a good one. They're predominantly they are a media broadcasting company located in Atlanta, Georgia. Largest owner of top-rated local television stations and digital assets in the U.S. They own and operate 93 digital properties in 93 television markets that reach 24% of U.S. television households. Over the calendar year 2019, stations were ranked first in 68 markets and first or second in 86 markets. They also own video program production, marketing, and digital businesses, including Raycom, Tupelo Raycom, RTM Studios, the producer of Power Nation programs and content. And their operating revenues are derived primarily from broadcast and internet advertising and from retransmission consent fees. In 2019 and 2018, their largest market by revenue was Cleveland, Ohio, at about 4% of revenue in 2019. Their top 10 markets by revenue contributed approximately 24 and 32% of revenue for the years ended 2019 and 2018, respectively. Their CBS affiliated channels accounted for 34% of their revenue in fiscal year 2019, NBC 32%, ABC 15%, Fox 11%, referred to here as the Big Four. In each of their markets, they own and operate at least one television station from one of the Big Four networks. Nearly all of their stations also broadcast secondary digital channels affiliated with various networks or independent of any network. And of course, they are heavily regulated by the FCC. They grant licenses to television stations. Each commercial television station in the U.S. is assigned to one of 210 designated market areas, DMAs, ranked in size according to the number of television households, the largest DMA being New York City, because of course it is. Their strategy is pretty simple: grow by leveraging their diverse national footprint. They operate in DMAs ranked between 12 and 209, and try to maintain their leadership position. And their leadership position allows them to negotiate retransmission contracts with cable system operators, telephone video distributors, direct broadcast satellite operators, and or multi-channel video programming distributors. When you see MVPDs, think Charter and what they do, Charter Communications. They continue to pursue strategic growth and accretive acquisition opportunities, so they are planning on getting larger. They're still under the footprint of the 39% ownership limit that the FCC allows media broadcasting companies to obtain. The FCC allows media broadcasting companies to get as big as 39% of all television households, and they are sitting at 24. Sinclair Broadcasting is actually at their max right now at 39% of television households. And it shows the Gray Television Network still has a lot of space to grow, even after the Raycom merger, even after buying out all of Raycom's assets. They still are at 24%. They have an incredible amount of space to grow, and they are still showing that they intend to use all of it. And they're showing their station list here from 12 all the way down to 209. You can see Virginia, Tennessee, even Hawaii, Green Bay, Louisiana, a little bit of Texas, New York, upstate New York by the look of it. South Carolina, Georgia, of course, their main territory. Covering a lot of the southeastern United States. Cyclicality. Political advertising revenue is generally not as significantly affected by economic slowdowns or recessions as are non-political advertising revenue, so 2020 should not be that much of a boon to them in terms of economic headaches brought from COVID-19. Broadcasting revenue is generally highest in the second and fourth quarters each year. The seasonality results partly from increases in consumer advertising in the spring and retail advertising in the period leading up to and including the Christmas holiday season. Advertising revenue is typically higher in even number years due to spending by political candidates, political parties, special interest groups during the on year of the 2 year election cycle, heaviest during the fourth quarter. In addition, the Olympics being broadcasted by their NBC affiliated stations during even numbered years generally leads to increased viewership and revenue during those years. No single customer is more than 5% of the revenue, but they derived a material portion of their non-political broadcasting ad revenue from advertisers in a limited number of industries, particularly the automotive industry, which has been getting hard hit by COVID. 25% of their total broadcasting advertising revenue for the past 3 years has come from the automotive industry. In addition to their affiliations with the Big Four, they also are affiliated with the CW Network or CW Plus, My Network, the Me TV Network, Justice Circle, This TV Network, Antenna TV, Telemundo, Cozy, Heroes and Icons, and Movies Network, and they're down the list. They have a very large swath that they are able to cover. January 1st, 2020, Circle Media, a Nashville, Tennessee-based joint venture between Opry Entertainment Group, a subsidiary of Ryman Hospitality, and Gray, launched a new country music and lifestyle television network on the secondary channels of numerous TV stations. Circle Media has now launched on Gray television stations in 56 markets, and many others through separate distribution agreements with CBS television stations and other broadcasters. And they're mentioning here the reach of the CW network. The CW Plus network generally provides programming for the entire broadcast day for CW affiliates in markets smaller than the top 100 DMAs. Affiliates of Fox and CW must purchase or produce a greater amount of programming for their non-network time periods, generally resulting in higher programming costs. Affiliates of Fox and CW, however, retain a larger portion of their ad time inventory and the related revenues compared to Big Three affiliates. Here they're listing their competition. Part of their competition is from MVPDs. And signal coverage and carriage on MVPD systems also materially affect a television station's competitive position. Obviously, they compete with the audience for what may and may not be popular at any given time. Tastes change rather quickly. Can the company move as quickly as tastes change? Here they mention on page 12, programming competition for non-network programming involves negotiating with national distributors or syndicators that sell first-run and off-network or rerun programming packages. Each station competes against the other broadcast stations in its market for exclusive access for first-run programming like Wheel of Fortune and off-network reruns like Seinfeld. Broadcast stations also compete for exclusive news stories and features. And advertising is how they make the vast majority of their money. At the bottom here, our stations compete for ad revenues in their respective markets with other television stations, digital platforms, including Google and Facebook. They are competitors or seen as competitors to Gray Television. And they also see yellow page directories and direct mail and transit advertising as their competition as well. I found that interesting. (6,912 full-time employees. 217 of those full-time employees and 7 part-time employees are represented by various unions. They consider their relations with their employees to be good. They have a lot of debt, and they list that immediately here as the first risk factor. $3.8 billion in aggregate amount of outstanding indebtedness, excluding intercompany debt and deferred financing costs. Obviously, COVID has probably put a lot of stress on this, including a secured debt under their undrawn $200 million revolving credit facility. They have 7% senior notes due 2027. The indenture, the 2026 notes indenture governing our outstanding 5.875% senior notes due 2026, and the indenture governing 5.125% senior notes due 2024 as well. It took out a lot of debt to do the Raycom purchase, but so far so good. They don't seem to be stressing too much about it, but it is a factor that they did take on a good amount of debt to do it. Obviously, the associated covenants and headaches with taking out a lot of debt here, the restrictions that taking out that money has put on them, including incurring additional debt, making investments or acquisitions, issue guarantees, amend their articles of incorporation or bylaws, and all this fun boilerplate stuff. And once again, mentioned here that their concentrated stream of revenue is rather dangerous. 25% of their total broadcasting revenue comes from ads in the automotive industry or from the automotive industry. So if they lose those ads, it's going to be a bit of a big problem. The automotive industry has been getting hit pretty hard due to COVID this year. So we'll see how it plays out for them. It more than likely will be offset by higher political ad revenue. But also may be additionally offset by spending related to COVID-19 operating expenses as well. It's a pretty tough time for businesses like these that rely on ad spending and companies that are cutting it back. It's going to do them no good. They're dependent upon retransmission consent fees with MVPDs or agreements that they have with MVPDs. They may be unable to maintain their digital ad revenue. They don't have long-term agreements with most of their digital advertisers. They've incurred impairment charges on their goodwill and or broadcast licenses. They are a holding company with no material independent assets or operations, and they depend on their subsidiaries for cash. On page 26. On page 28 here, it's outlined in detail. A single television station owner may not reach more than 39% of U.S. households through commonly owned TV stations, subject to a 50% discount of the number of TV households attributable to UHF stations. The commission issued an NPRM seeking comment on whether it should modify or eliminate the national cap in December 2017. Currently, their station portfolio reaches approximately 24% of households, or approximately 17% after applying the UHF discount. They have room to grow, to say the very least. And by the look of it, they intend to use all that room. They don't pay dividends on their Class A shares. They have the ability to issue preferred issuances of up to 20 million shares, including the shares of preferred stock issued in the Raycom merger. They still can issue up to 20 million. Holders of their Class A shares have the right to 10 votes per share on all matters to be voted on by their shareholders. If securities analysts don't continue to publish research or reports about their business or publish negative evaluations of their stock, the price could decline. They are susceptible to short sales or short reports, which I do find interesting. Businesses usually don't mention that. Hilton Howell is the current CEO since January 2019. With a large amount of experience in insurance. They issued 650,000 shares of the Series A perpetual preferred with a stated face value of $1,000 per share on January 2nd, 2019, as a portion of the consideration paid in the Raycom merger paid out at a rate of 8% a year, or the company's option in kind at a rate of 8.5% per year. They don't have a right to exchange or convert such shares into any of their other securities. They issued 11.5 million of their common stock at a price of $14.74 a share. The closing price of their common stock on their last trading day preceding the Raycom merger. They have not paid dividends on their common stock since October 15th, 2008. So they have done it. Just it's been about 12 years, almost 12 years. Their restated articles of incorporation require that their common stock and Class A common stock receive dividends on a pari passu basis when declared. I really hope I pronounced that right. Pari passu? I think I have no idea. I claim no expertise. It's no child left behind investing for a reason. They recorded a loss from early extinguishment of debt. Footnote number 3 here on the statements of operations data on page 37. And they're constantly buying TV stations. Page 39 here, May 1st, 2019, they bought out the assets of WWNY-TV, WNYF-CD in Watertown, New York, and KEYC-TV in Mankato, Minnesota from UCC, the United Acquisition, for an adjusted purchase price of $48 million. October 1st, 2019, they went into the Charlottesville, Virginia market from buying out assets from Waterman Broadcasting Corporation, the Charlottesville acquisition for $13 million using cash on hand. And to meet regulatory requirements, they divested the legacy stations in the market WCAV and WVAW. The divestiture gained resulted in a gain of approximately $20 million. This is just a turnaround game for the vast majority of these stations. They buy new ones and then sell old ones and rinse, repeat. On page 40, they mentioned because their stations and markets are not evenly divided among the big four networks, their local and national advertising revenue can fluctuate between years related to which network broadcast the Super Bowl. Corporate and admin expenses before depreciation increased 154% to $104 million. For 2019 compared to 2018, the increase was due primarily to $34 million of transaction-related expenses associated with the acquisitions, such as legal and other professional fees. Non-cash stock-based comp were $11 million. They do have a retirement plan. The pension plan monthly plan benefits under the Great Pension Plan are frozen and can't increase. No new participants can be added to it. I think they're trying to get rid of it now, by the sound of it, and try to lower their own costs on the long term. The yield curve is based on externally published index, specifically designed to meet the criteria of the United States GAAP. They mention a discount rate is selected annually to measure the present value of the benefit obligations. They estimate the timing and amounts of expected future benefit payments and apply a yield curve to develop to reflect yields available on high quality bonds. It's based on an externally published index designed to meet US GAAP requirements. Discount rate here was 3.14%. They used an assumed rate of return for 6.5% on their assets invested in the Great Pension Plan. The estimated asset returns for this plan calculated on a mean market value, assuming mid-year contributions, were a gain of 17.6% for the year. And as you can see here, they're also moving to a 401k capital accumulation plan on page 45. They do have off-balance sheet arrangements. They have two types of syndicated television programs that they run: first run and off-network programs. First run programs like Wheel of Fortune, off-network reruns like Seinfeld. First run programs have not been produced at the time the contract to air such programming is signed. Off-network reruns have already been produced. And this is the nature of their off-balance sheet arrangements on page 46 of their 10K. RSM is their auditor. They do mention a critical audit matter on page 55 on how the company may handle goodwill impairment. And this is not surprising. They've served as their auditor since 2006. Just to show here. It is the one phrase I look for. I know the auditors aren't perfect, but it's the best that I can do. Ad expenses were $2 million in 2019. Allowance for doubtful accounts, and their allowance for doubtful accounts is equal to a portion of the receivable balances greater than 120 days old. Concentrations of credit risk. They sell airtime on their broadcast and ad space on their websites to national and local advertisers within the geographic areas in which they operate. Credit is extended on an evaluation of the financial condition, and generally advance payment is not required except for political advertising, which is really important because this was pointed out in the Wall Street Journal very recently. This was a pretty well done article. Talking about the political ad spending going on in key political states. So I'm going to start here. For most of the election cycle, Iowa has been on the watch list for Priorities USA, which has a $200 million budget plan for the election. The Des Moines area accounted for 2.6% of the almost 40,000 local broadcast TV spots aired by the Trump campaign during June. Ads in the Ohio markets of pay attention here very closely. Cleveland, Columbus, and Cincinnati accounted for 2.3% of the total, while those in Atlanta, Savannah, and Augusta, Albany, Macon markets combined represented about 1%. And they intend to continue spending. The Trump campaign appears poised to continue spending on broadcast TV in Ohio. Ad buys already in place for after Labor Day show it plans to spend $18.4 million in the state, the second to the $37.8 million booked so far for Florida. So right here, you can kind of see the cash flow moving around in these key markets for the company. As we said earlier, they're 4%. 4% of the revenues came from Cleveland, Ohio, in the most recently finished fiscal year, and Cleveland's going to be a large place where they intend to spend money after Labor Day, so in a few weeks. And they plan to spend $18.4 million in the state. Expect Gray Television Network to get a good chunk of that money. Now back to the 10K. Running through the goodwill impairments and how they deal with this. It's how they recognize revenue. Broadcast revenue is generated primarily from the broadcast of TV, ad time to local, national, and political advertisers. Performance obligation is satisfied when the ad is broadcast or appears on their station's websites or mobile applications. Payment terms are expressly stated in their terms and conditions for their contracts. They have an unconditional right to receive payment within 30 days of the invoice date. They will get their money. The Sioux Falls acquisition on page 78 here is detailed a little bit more. They acquired KDLT in the Sioux Falls, South Dakota market, DMA 113, for $33 million using cash on hand. Continuing on and spreading their reach as a company. This is their long-term debt here. They're explaining it a little bit more. It's clipped to LIBOR plus an applicable margin of 2.5% for LIBOR borrowings. LIBOR's going away in a few years. Their obligations under the 2019 senior credit facility are secured by all of their consolidated assets, excluding real estate. They are in compliance with all required covenants under all their debt obligations. They completed an underwritten offering in 2017 of 17.25 million shares at a price of $14.50 per share. Net proceeds were $239 million under the offering, after deducting underwriting discounts of $11 million and expenses of $1 million. They have various non-cancelable leases that last between 1 year and a century. I found this a little hilarious. Operating lease costs were $11 million, including variable lease costs were $11 million on page 91. Great pension plan over here. Just kind of break it down a little bit for you. The real estate accounts, fixed income accounts, cash management accounts, and equity accounts, as to how they're somewhat moving around their money a little bit. And they're breaking down quarterly segment information as well. They break out CapEx for it too. I found that interesting. They're pretty open with letting you guys figure out how this is going to go. They're pretty open with seeing how everything is kind of pieced together within the company for their broadcasting segment and their production company segments and other. I don't know what they're going to do with the production company segment. If they get into production, that's going to be a bit interesting to see how they handle it, because that's a very capital heavy job. And they might just be better at broadcasting, but we'll see as they release earnings today to see what they do. All right, I think that's going to be it. I'm curious to see how this earnings call is going to end up going. Please remember to like the video if you want to see more content like this. Like, comment, subscribe, critique, so on and so forth. And then the next video I'm going to do is probably going to be on Big Laurie Holdings. More than likely going to be on that one. I want to find companies that most people don't want to pay attention to, not that they ignore or forget, but companies that they just neglect outright. And I think I'm going to focus on Big Laurie Holdings for the next video. Thank you.